The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
We completed the well using some leading edge North American completion technologies that were brought to bear for the first time ever in Brazil. And yeah, the initial results over the first 30-day average period, close to 1,100 barrels of oil equivalent per day, which is nearly double the pre-drill expectations that we had set.
Hello, you're watching Proactive. I'm joined by Corey Ruttan, CEO of Alvopetro Energy. Corey, very good to speak with you. You're up with your third quarter results to the end of September. But following on from that, October was a record month for Alvopetro, almost 2,900 barrels of oil equivalent a day. What's been driving that surge in production, and how confident are you the momentum can continue into 2026?
Yeah, thank you, Stephen. It's a pretty exciting result for us to be setting new production records at Alvopetro. The background of this really is late last year, we increased our productive capacity quite significantly off the strength of some results from our 100% working interest Murucututu project onshore northeast Brazil. That was the 183A3 well. And that really gave us the confidence to make an amendment to our long-term gas sales agreement with our off-taker, Bahia Gas. And as part of that, we increased our firm delivery obligations to Bahia Gas by about a third. And it's really helped us deliver some strong production results in the first part of this year. Our first quarter was up 41% quarter over quarter, and we've been pretty consistent through the quarter. And then more recently, to help drive that record level in October, we added a follow-up well to that 183A3 well on the same project, which is called 183D4, which has really helped establish that new record and really positioned us well as we exit this year and move into next year with an expanded Murucututu development program. And then I would say off the strength of those production results, I think with the Q3 results we announced just yesterday, it's allowed us to continue to post some pretty strong financial results. We generated funds flow from operations of over $10 million US in the quarter alone. That was off production of 2,343 barrels of oil equivalent per day. We continue to have very strong realized natural gas prices over $11 US per MCF. And that helps drive industry-leading operating netback margins and operating netbacks, or profit per unit of production, which for us approached nearly $60 US per BOE in the quarter.
You mentioned that 183D4 well at Murucututu, and really has outperformed expectations with more than 1,000 barrels a day on test. How does that result shape your development plans in Brazil going forward?
Yeah, no, we're extremely excited about the result. Like we said, we were excited about the 183A3 well last year. We drilled a new well up the structure, so higher on the structure by over 100 meters, which is the 183D4 well. We completed the well using some leading edge North American completion technologies that were brought to bear for the first time ever in Brazil. And yeah, the initial results over the first 30-day average period, close to 1,100 barrels of oil equivalent per day, which is nearly double the pre-drill expectations that we had set based on our independent reserve evaluation expectations last year. So I think it bodes well for our reserves when we announce those in February of this year. And it really opens up a whole series of follow-up development locations that will help underpin our longer-term growth.
Corey, you've also been expanding in Western Canada with a new partnership across the Mannville Stack heavy oil play. How does that Canadian growth strategy fit alongside your Brazilian gas business?
Yeah, I think it's a really nice complement. By way of background, in February, we announced a strategic entry into the Western Canadian Sedimentary Basin, into the Mannville Stack heavy oil play fairway. That's in Western Saskatchewan. More recently, we announced an expansion to that joint venture that we have with our partner, basically expanding to the entire Western Saskatchewan side of the play fairway. So this is a fairway that has stacked multi-zone heavy oil sands, lots of original oil in place per section of land. And after earning, we're going to have over 74 sections, so 74 square miles of, I think highly attractive acreage in a proven fairway with strong economics and a place where we can apply leading edge drilling technology using open hole multilateral wells to really unlock the potential here. And with this new farm in, we built a multi-year inventory of highly attractive drilling locations. And, as a result, I think it's a really nice complement to Brazil. These are relatively lower cost wells. We can kind of feather them in based on our other capital programs as well. And it's a really good call option on oil prices. The economics, obviously increase quite significantly as oil prices move higher as well.
Your natural gas contract price in Brazil has been adjusted a little lower. How do you see that affecting near-term cash flow, and how important are those extra spot sales above your firm contract volumes?
Yeah, our third quarter price was actually quite high. It benefited a little bit from some foreign currency adjustments in Brazil. The November effective price down just slightly, still over $10 US per MCF. So put that into perspective to North American gas prices. This is exceptional realized pricing. And we have complemented that, because we've had a whole bunch of new production come on off the strength of the results I talked about earlier. We have been selling some additional volumes on a spot basis, sometimes at prices below that. But overall, I think you're going to see, based on the current production and the production you saw in October, quite a step up in our funds flow from operations moving forward.
You talk about balancing growth with shareholder returns. With record production and solid cash flow, how are you thinking about dividends and capital allocation as you look ahead to 2026?
Yeah, we've gone through a big concurrent capital phase here, both in Canada and Brazil. So it's a little bit slower today. We're getting preparing for capital programs moving forward next year. But our general approach has always been to take basically half of our funds flow from operation or cash flow from operations and return that to stakeholders. And we have no debt outstanding, so the vast majority of that goes to dividends right now. And then we take the other half of the cash flow and reinvest it in organic growth. So I think, it's not a hard and fast rule that it's exactly 50%, but we've been, I think, since inception of our project, we've been almost exactly the 50-50 capital allocation. So I would expect that to continue.
Well, Corey, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
All right. Thank you very much.
That's Corey Ruttan, the CEO of Alvopetro Energy.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.